Welcome to the October edition of the Peregrine Capital newsletter. It's been a great quarter for the Peregrine Capital funds, and our high growth fund is now up 11% year to date, and the pure hedge fund is up 8%. We're very pleased with this performance, especially given the significant market volatility that we experienced this year around the tariff news in the second quarter. So we're very happy we managed the downside risk there and then captured a good amount of the upside as markets improved. We continue with our resolute focus on delivering great returns while managing downside risk and volatility in the funds. The biggest theme of the last quarter has been what we'll call the debasement trade. So when Trump got elected, Elon came in and tried with this Department of Government Efficiency to reduce the US deficit. Very soon it became clear that there was very little political will to cut expenditure. Elon left Doge, and rather than cutting expenditure, we then got the big beautiful bill that massively ramped up government expenditure and deficits. And this really got the market thinking. What if countries keep running large deficits? What if they keep allowing high inflation? And effectively, they debase the value of paper money. So what have investors done? They've run to assets like especially gold, but also normal equities and things, assets like Bitcoin, to basically protect themselves from being stuck in normal currency while money is being debased. Given this trend we've seen, we've also built positions in precious metal stock, especially some gold shares, a few platinum group metals opportunities, which has performed very well for the funds. The same theme has been a big driver of the JSE. With the gold price now up 46% year to date, it's really sent things like gold shares and other precious metal opportunities like platinum skyrocketing, and the resources sector on the JSE is now up an incredible 120% for the year. Given that the resources is still a very big part of the overall South African market, this has driven the overall JSE, and resources now make up more than 30% of the entire SA market. As mentioned earlier, we have taken some opportunities in this sector given our view of the potential risk of currency debasement. But you'll never see us running 30% in something like resources. What we aim to do is find several individual exciting opportunities that are uncorrelated with each other, put them together, and that's how you create this consistent return stream over time with limited volatility. The other major contributor to our returns in the quarter has been the AI theme that has just continued. We've written and spoken about this multiple times in the last few years, and we believe it'll probably be the trend defining markets over the next 5 or 10 years. An interesting opportunity specifically this quarter that's worked very well was TSMC. We spoke about it in our semi-annual letter, and we built a position around the time the tariff sell-off happened. TSMC is the maker of the smaller size chips, like 2 or 3 nanometers, that gets used in things like the iPhone, but more specifically by NVIDIA to make the leading edge AI chips. And they're the only ones that can produce these chips at scale. It's been a great performer for the funds, and it's up more than 70% from the lows achieved, or the lows it got to during the tariff times. During the quarter, we also transitioned all our funds to our own internal management company. Nothing with regards to how we manage our money has changed at all. The only thing this means is that those of you investing directly with us now deal directly with our own client servicing teams, and we hope to deliver and aspire to deliver exceptional client service to you. It's been a particularly exciting quarter and year to manage money. We look forward to closely monitoring the trends we spoke about in this newsletter towards the end of the year and into the fourth quarter to see if anything changes or they just continue, and stand ready to take advantage of opportunities that we think the market will present in that time. As we head to the end of the year, we also wish you a happy last 3 months of the year and a great holiday to end off 2025.